Somewhere behind a locked door in San Salvador sits a company worth more than McDonald's. And almost no one on earth can tell you who actually owns it. Its name is Tether. You have probably never opened its app. You have probably never touched its stock because it doesn't have one. And yet right now the money it prints is quietly running through the pockets of 650 million people. That number alone should stop you. That's more people than the population of the United States and the European Union combined. This company employs a few hundred people, fewer than a single mid-size hospital, and yet it has become one of the largest buyers of United States government debt on the planet. Bigger than Saudi Arabia, bigger than South Korea. A firm smaller than most regional banks is quietly propping up the world's largest economy. So who is cashing the checks? In August 2026, the International Consortium of Investigative Journalists, the same reporters behind the Panama Papers and the Pandora Papers, went looking for the answer. What they found was not a boardroom. It was a black box. Tether mints a digital token called USDT. One token, $1, always redeemable. At least that's the promise. USDT has become the backbone of a parallel banking system, moving dollars into corners of the world where real banks refuse to go. It has also become, according to ICIJ's reporting, a preferred tool for money launderers running industrial-scale scam compounds across Southeast Asia. Law enforcement agencies from Washington to London now depend on Tether's cooperation just to trace where criminal money is hiding. That is the paradox at the center of this story. Tether is both the police department's best friend and crime's favorite currency. And the company sitting at the center of all of it has never given the public a full picture of who controls it. Most companies this large are publicly traded, which legally forces them to disclose who their major owners are. Tether chose the opposite path. It stayed private and stayed silent. Boston College law professor Renee Jones has spent years studying exactly this kind of corporate secrecy. She told ICIJ that concentrating this much wealth and power in so few hands with so little disclosure should worry all of us. Because when a company this size answers to no public shareholders and no single government, the normal checks on power simply don't apply. So ICIJ did what regulators apparently would not. They went digging through leaked ownership records to find out who really holds the keys. What they found reads less like a corporate filing and more like a heist movie. And it starts with a man who, a decade before becoming one of the richest people alive, was selling DVDs on a Bitcoin forum. His name is Giancarlo Devasini. Today, Forbes ranks him the 22nd richest person on Earth, worth an estimated $89.3 billion. But rewind 20 years, and Devasini was standing in an operating room in Turin, Italy, working as a plastic surgeon. He later moved into electronics trading, and eventually found his way onto early Bitcoin forums, where he sold refurbished computer parts and DVDs to fellow enthusiasts. Around 2014, a small group of entrepreneurs, including a former child actor once known for playing hockey in a Disney movie, launched a project called RealCoin. It was the earliest version of what would become Tether, and almost nobody believed in it. One of the original founders later admitted that people thought the idea was almost impossibly stupid. RealCoin partnered with a Hong Kong-based crypto exchange called Bitfinex to get its tokens into circulation. That partnership introduced Devasini and a Dutch entrepreneur named Jean-Louis van der Velde into the picture. Within a short time, the original founders had transferred their shares to these two Bitfinex executives. Devasini and van der Velde now controlled the company that would go on to mint hundreds of billions of dollars. And what happened next, according to leaked shareholding records reviewed by ICIJ, is where the story turns strange. In early 2016, corporate records showed Devasini owned 100% of Tether Holdings, the British Virgin Islands company at the center of it all. Then in January of that year, something unusual happened. Tether's own executives asked their corporate administrator to move fast. Emails obtained by ICIJ show instructions to transfer documents to Hong Kong, shifting at least 55% of Devasini's shares over to van der Velde. Another slice of those shares went to a separate firm called Digfinex. In the space of weeks, the man who owned the entire company suddenly owned almost none of it, at least on paper. But that arrangement didn't last. Records from around 2018 tell a very different story. By then, van der Velde's stake had shrunk to roughly 15%, while Devasini had climbed back to around 43%. Once again, the largest single shareholder. Experts who reviewed this pattern for ICIJ called it unusual, even for the chaotic early days of a startup. Shares moving back and forth like this, in a company backing hundreds of billions of dollars in currency, is not normal corporate behavior. It's the kind of maneuvering you'd expect from people trying to obscure exactly who is really in control. Those same 2018 records also revealed something else. A man named Christian Hansen once held a 6.6% stake in Tether. If he still holds it today, that slice alone would be worth more than $13 billion. ICIJ tried to reach him. They couldn't. Other names surfaced too. Christopher Harburn and Stuart Hoegner, both major early stakeholders whose current ownership remains a mystery. Tether was asked directly about all of these numbers. The company did not respond. So by 2018, at least 4 or 5 individuals appear to have controlled a company now worth $200 billion. And the public still doesn't fully know who holds what today. Fast forward to last year. Tether made a geographic move that tells you everything about its priorities. It relocated its legal headquarters from the British Virgin Islands to El Salvador. On the surface, that might sound like a downgrade, trading one small jurisdiction for another. But the British Virgin Islands had recently signed on to international pledges to share company ownership information with tax authorities around the world. El Salvador has signed no such pledge. Cambridge University professor Jason Sharman put it simply: if you're looking for old-style secrecy, it's one of the few places left, and the timing is what should catch your attention. Around the same period Tether moved to El Salvador, ICIJ found a quiet but massive shift in who actually controls the company. U.S. regulatory filings from mid-2024 show Devasini and van der Velde listed together as they had been for years. Then early last year, van der Velde simply disappeared from those filings. In his place, a new line appeared, stating that Devasini now holds a voting interest of greater than 50% in Tether. A law professor at the University of Colorado told ICIJ that language like that usually signals one thing: someone has taken outright control. Tether did not respond to questions about what triggered this change, and it gets more personal than paperwork. According to documents reviewed by ICIJ and Italian outlet L'Espresso, Devasini and his wife quietly became Salvadoran citizens in early 2025. Several other Tether executives have purchased luxury real estate in San Salvador around the same time. This isn't a handful of coincidental life choices. It looks like the coordinated relocation of an entire leadership team to the one country that will ask them the fewest questions. Now here is where hidden money starts touching the highest levels of American government. In 2024, the Wall Street Journal reported that Cantor Fitzgerald, one of Wall Street's most powerful financial firms, acquired rights to a 5% stake in Tether. At Tether's current valuation, that stake could be worth roughly $10 billion. The man who ran Cantor Fitzgerald at the time is named Howard Lutnick. Today, Howard Lutnick is the United States Secretary of Commerce. Before taking office, Lutnick was one of Tether's loudest public defenders in America, repeatedly vouching for the company's reserves. When he joined the Trump administration, ethics rules required him to divest his stake in Cantor Fitzgerald. Bloomberg reported that Lutnick transferred his ownership to trusts benefiting his 4 adult children in October 2025. Here is the detail that should make you sit up straight. The very next day, according to Bloomberg's reporting, Tether loaned an undisclosed sum of money to a trust called Dynasty Trust A, the same trust benefiting Lutnick's children. Around this same window of time, Congress passed the Genius Act, sweeping new legislation regulating stablecoins in the United States. Bloomberg reported that the law included language favorable to foreign stablecoin issuers, exactly like Tether. 2 United States senators, Elizabeth Warren and Ron Wyden, took notice and demanded answers. In a formal letter, they wrote that they wanted to be certain Tether had not sought to bribe or otherwise exert influence over the Commerce Secretary. According to reporting on the matter, Tether has still not fully responded to the senators' questions. Cantor Fitzgerald has stated the transaction was funded through multiple sources at market rates, and Lutnick's office says he has fully complied with his ethics agreement. But the sequence remains on the public record. Divestiture one day, a loan to his children's trust the next. Favorable legislation shortly after. Whatever the explanation, this is what happens when a company nobody can see inside starts writing checks near the people who regulate it. For years, the single biggest question about Tether has been simple. Does the company actually hold the dollars it claims to hold? In 2021, Tether paid a $41 million fine to U.S. regulators after authorities said the company misrepresented its dollar reserves. Since then, Tether has never released a full, completed audit of its overall holding structure. It commissioned one earlier this year through KPMG, a major global accounting firm. But that audit only covers one operating subsidiary, not the parent structure that actually controls the company's ownership. According to reporting from Cointribune, that parent entity has a single listed director who effectively answers to Devasini himself. To help back its currency, Tether has become one of the largest buyers of physical gold on Earth. It stores a portion of that gold inside a repurposed nuclear bunker in Switzerland. Tether's CEO, Paolo Arduino, described the facility to Bloomberg in 3 words: a James Bond kind of place. Picture that. Tons of gold bars sealed behind blast doors built to survive a nuclear war, backing a currency most of its users have never questioned. Now look at the numbers behind that vault because they tell a story of their own. At the end of the first quarter of 2026, Tether reported a record excess reserve buffer of $8.23 billion. By the end of the second quarter, that buffer had been cut nearly in half, down to just $4.11 billion. Tether's own attestation, prepared by the accounting firm BDO, showed total assets of $187.75 billion against liabilities of $183.64 billion. That gap, just over $4 billion, is the entire safety cushion behind a currency worth $184 billion in circulation. The company said the drop came from falling gold and Bitcoin prices during a volatile quarter, but Tether offered no detailed line-by-line account of exactly where that missing capital went. For an institutional investor pricing counterparty risk, that is not a rounding error. That is the exact kind of blind spot that turns a slow leak into a bank run. And in Europe, regulators have already started pulling away. As of July 2026, no exchange licensed under the EU's MiCA framework offers USDT trading pairs at all. Tether chose not to meet Europe's reserve and disclosure requirements. Its rival, Circle's USDC, was built to meet them and has been quietly absorbing the customers Tether is losing there. That single fact should worry anyone using USDT as a settlement rail outside the United States. If the world's most transparency-conscious regulators won't let this token trade, ask yourself what they know that you don't. If you manage a fund, a treasury, or a family office with exposure to crypto markets, this is not a niche in crypto story. This is a counterparty risk story. You cannot model the risk of a company that won't show you its full ownership structure or its full audited balance sheet. If you run a fintech or remittance business routing payments through USDT because it's the cheapest, most liquid option, ask yourself what happens to your customers the day that $4 billion cushion disappears entirely. And if you study financial stability, sanctions, or the architecture of global power, Tether is a preview of something bigger. It is what happens when a private company becomes systemically important enough to move markets, without ever answering to the public the way a bank or a public company must. This is not a conspiracy theory. Every claim in this video comes from public reporting. ICIJ, Bloomberg, The Wall Street Journal, Reuters, the company's own attestations, and the official record of the United States Senate. Tether may be entirely solvent. It may honor every single redemption tomorrow and the next day and the day after that. But solvency isn't the question here. Transparency is. A $200 billion company printing the dollar of choice for 650 million people should not require investigative journalists digging through leaked records just to answer a basic question: who owns you? Right now, nobody outside a small circle in San Salvador can answer that with certainty. And history has shown us, again and again, that the moment no one can see inside the vault is exactly the moment something goes wrong inside it. This channel exists to pull back curtains like this one, to trace where hidden money goes and who really holds the power behind it. If this investigation raised more questions for you than it answered, that means it worked. I read every message that comes in about these investigations, and I genuinely like to hear what you found most alarming here. You can reach me directly and privately on Signal at the username Emmanuel Akash 123.43. Link is also in the description. Subscribe if you want to keep seeing exactly where the world's hidden money and power actually live. Because the next $200 billion black box is already out there, and someone needs to look inside it.